All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I'm going to try to keep this video a little bit short here this morning. Not a lot of new stuff out there, but a few things that do want to address. Let's start off with the challenge. We have Alibaba, which I entered yesterday afternoon on the buy signal. Here this morning, the option is trading at a mark of $8, so we're up 10 cents on it. Okay, great. But anyway, it's gonna have movement. We saw shortly after my entry yesterday, it dropped $2, then it rallied $1.50 into the close this morning. Gap down almost 3, has gone green and now reversed a little. It's gonna have volatility to it with what's going on in the market. But it's something where I'm gonna just run it with the challenge parameters and go. Now, I did only do about 30% of the challenge into Alibaba instead of the normal 40%, and that has to do with just how the options are priced and the overall market conditions, and not want to get overly aggressive. But we have plenty of cash to go jump into another trade if and when we get a trigger. Now, as far as the new triggers, there are none here this morning. There have been a few crossovers that have jumped on and off the list on the downside. Honeywell and Pepsi, both with some downside crossover action on them here today. Both stocks very similar in the way that they jumped yesterday and are coming back today. In fact, there are a lot of stocks that look like this here this morning. It's a very common picture where after yesterday's big rally, gapping down and trading inside of yesterday's candle. So very common action, across the board. No triggers for neither Pepsi or Honeywell. If we look on the upside, we have Triple M, which was an interesting one for me to see on the crossover list. It's not on the challenge trigger list here, but you know where I stand with Triple M. This is a stock that we talked about back in October and talked about. This finally has come into some cheap areas for Triple M. Now, it's not a kind of no-brainer cheap where you look at it and say, well, it's going to be indestructible. It's cheap enough that it'll survive anything. It's got to get down to about the 110 area for that to be said. But it is one that is going into a more favorable comparable cycle this year, and one where we're going to see revenue and earnings increases that look a little juicier than what they have been over the last 2 years due to the simple, comparables. Now, comparables arguments just don't hold as much water when we have something going on right now, like what we have right now. It does push some of that back a month or even an earnings quarter. But, upside 3-7 crossover, bottom line here, but that isn't going to trigger for the challenge, most likely. You can see Stoke 39.1 below 20, 20-day moving average sharply falling, and stock trading below it. We typically aren't going to see signals, at that. Now, can it rally, set a higher low, give us a nice signal? Yeah, it can, and sure would be nice to see. I'd love to play some Triple M on the upside. Right, so that's the challenge. Nothing too too striking here. Nothing too game changing here with it, and we'll continue to hold on to Alibaba. Now, I titled this video "The Meaning of a Challenge Trade." This is something that I feel I need to address this morning, and something that you've heard me talk about a few times before, and you'll probably hear me talk about it again. But there's a level of panic in the market right now that is two-sided. We don't get that very often, but it's two-sided in terms of there's panic, fear, and selling because hey, people are they're getting hammered, and what do I do? Do I sell out now? How do I manage this? Then there's the other side of the panic of wait a minute, if this market goes straight up, if I'm not in it, am I going to miss? Oh man, when do I get in? So there's a panic sell side and a panic buy side in this market, which is always something that is nice to see if you're watching from the outside looking in, because you can start to see divergences and differentials coming in. But it's also the type of emotions that get traders and investors specifically to make very poor decisions, because they get amped up, they get emotional, they get, oh man, it just moved a ton, uh-oh, I gotta get in, or oh man, it's just dropped a bunch, do I hold this, do I get on out, do I add more, what do I do? It brings a lot of questions. So when there are a lot of questions, people look for meaning in a lot of things that simply have no meaning. Going into the case of something that has no meaning in the context of the overall market, that's a challenge trade. The Alibaba entry yesterday said nothing about, oh, well, bulls are now in control of this market, or, oh, well, the market's now going to go up. Oh, go buy JP Morgan because, well, the market's going to go up and you can just buy the dips. We just had a bull signal on Alibaba. It said nothing about the price action in China overall. It said nothing about any of that. There is no meaning in the general investing, trading, and market context outside of, we got a buy signal on Alibaba, set up the risk reward, go. That's it. It's a technical trade, meaning it's driven from the mathematics of the charts of the price action over the last 3 years. That's what it's driven on. It's not driven on what the news headlines are. It's not driven on what the coronavirus is. And, more importantly, it's not driven on what I think about any of it. It's not driven on whether I like the trade or not. It's not driven on, it's not confirming the market is bullish or the market is bearish. It's none of that. There is no meaning. And so one of the things I just can't say enough is, please, do not take meaning out of a challenge trade, other than it's a challenge trade. That's it. Starbucks, the trade we made on that said nothing about anything. Same with JP Morgan. Same with gold. Right? We got the chart technical signals. Go. Let's make it happen. The probabilities are in our favor, and go. That's what it means. Buying Alibaba yesterday did not mean, oh, well, the market's free and clear. I can't stress that enough. And I made the comment yesterday afternoon that we saw the market vibe move up a little bit. And it was, it still was bearish. It did not go bullish. But a couple point move from where it was yesterday, we could see it turn bullish. It could, right? It could. But the thing about indicators, the thing about the market vibe, the thing about any of these market metrics is it's not a trader's or investor's position to predict what it's going to do. That doesn't do anything. There's no value in predicting what an indicator meant to kind of show the probabilities is going to do. Essentially, it's just kind of throwing darts. The idea behind indicators, especially market breadth indicators like a bullish percent index, isn't to predict, well, the bullish percent index is now going to bounce. It's to understand, okay, it's in a very bearish position right now. It means path of least resistance tends to be lower. What do we need to see to change that idea? We need to see a 6% bounce. Not to say, well, it's at 36, so this is a pretty good place for a 6% bounce to come in. That doesn't make any sense. That doesn't have much logic to it other than a guessing game. And I guess, when it comes to the market, there's a lot of guessing games. But when the volatility gets to what it is right now, it's where traders, investors get themselves in that trap of the guessing game. Because there is panic. There's panic on the downside. There's panic on the upside. And all you have to do is turn on the TV for 15 minutes on the CNBC or Fox Business and hear some of the people talking about it. You can see some of the fund manager just panic in their voice, and they're trying to stay calm, but in the back they're going, "Oh man, come on, this is getting a little crazy." And so please, this is something where when we see a change in signal, meaning, hey, the market vibe turns bullish, and so that's, going to change the nature of the market, I'll get on, I'll talk about it. But until then, what is will likely continue to be, and that is big rally, big drop, and stuff that doesn't have a big major news headline or big reason, driving it. We don't need a massive headline to drive the market 2%. It just isn't needed. And so looking for meaning in every single move is a good recipe to drive a trader insane, and something that, just doesn't have a heck of a whole lot of value. And so my advice is simply this. Stop looking for meaning in things. Take a look at what you're looking for. Take a look and say, okay, is this stock in an area that I'm comfortable with? If it's not, avoid it. I'm not willing to be a big buyer yesterday. Why? Because I do not feel comfortable chasing this type of rally. Not when the metrics haven't changed. So I sit on the sidelines. What's that mean? Well, that means that if today the market were up 3%, I'd be looking and going, man, that hurts. That hurts. I wish I were in. But at the same time, it doesn't mean I should have made a different decision. I do what I'm comfortable with. And that's what you have to do. You have to do what you're comfortable with. Because the bottom line is, no matter what the market does right now, it doesn't matter if the market goes and hits a new low. It doesn't matter if the market goes and hits new high. There will be trading opportunities. There will be setups. There will be other things. This isn't a market that just has one or two trading opportunities a decade, and if you miss them, you're in trouble. That's just not the case. It's not the reality of the market, and it's something that hopefully, if you can keep that in mind, understand that, hey, there's no value in predicting what the metrics are going to do. It's something that may add a little calm, may add a little peace to you, kind of looking and saying, I'm going to wait for something to come to me. And all right, it came to me. Well, forget what everybody else is saying about the market. I know it's down. I know it's doing this. I know it's doing that. I'm going to go grab some, because ultimately this is an area where I'd like it. But please do not read anything into the challenge trades as far as what it means for other stocks and what it means for the market and what it means for, the price of tea in China, because there just isn't that significance. All right. Last thing, JP Morgan. Banks yesterday didn't outperform. We saw the market break above Monday's high, or above Tuesday's highs yesterday, and keep going. Banks did not, including JP Morgan. Banks lagging pretty good here this morning once again. I'm very interested as they come back and retest the lows to see if we do see some bottoming action in the banks, because we've talked that, hey, if we see the banks bottom, if we see the banks start to outperform, market probably goes higher from there. But so far we haven't seen it. Today's a pretty bad day for Bank of America, but at the same time, Bank of America and JP Morgan. But at the same time, just kind of coming back to these lows. Very interested to see how the price action unfolds down at these levels, because I do think there is some significance in that in terms of how investors view it going forward. And so far, this just tells me investors are still not super comfortable. They're not willing to, step in and buy and chase. They're still getting what? They're still getting the salty cookie, the analogy we used last week, and the buying the dips. It's still salty, and they're still getting burned, and that's going to take a little bit more to wear off, for the investor mentality to shift a little bit there. Thanks for hopping on. Have yourselves a fantastic day. I'll be back on with you here this afternoon. And we'll take a look at a few things that the market said about yesterday's action in terms of watch list creation and stocks that will have a tendency to outperform going forward. So I'll show you those here this afternoon. Take care.